In this lesson, we're going to start to take a look at how we record those transactions for the merchandise purchases. And this, again, will be using the perpetual system. The first situation we have is that the merchandiser purchases merchandise for cash. We're going to have a new account called merchandise inventory. This will be a balance sheet account that will sit under our prepaid accounts. So the order of liquidity will be cash, accounts receivable, prepaids, and merchandise inventory. In this case, we have the purchase of merchandise inventory for cash for $500. We know we're spending cash, so we're going to credit cash $500, debit merchandise inventory for $500. We can also have a discount. So what this means is the vendor, the person who we buy from, may wish to receive their cash a little bit faster, so they might give us an incentive to pay our bill a little earlier. In this case, Zmart purchases $500 of merchandise inventory on account. Our credit terms are 210 net 30. We'll talk about that in a minute. The initial entry will be to debit merchandise inventory, that asset account for our purchases of inventory, and credit accounts payable because we haven't paid for it yet. What does that 210 net 30 mean? Purchase discounts are usually referred to as this way. The 2 stands for the discount percent. In this case, we'll get a 2% discount if we pay it in 10 days, the number of days the discount is available. Otherwise, net is due in 30 days, the credit period. So 2% if we pay it in 10 days, or the net is due in 30 days. That would be without the discount. We're going to skip over that. So let's take a look at, this is an invoice that we might receive from our vendor. We'll have the date, the invoice number, who we are, who they are, all of that. Our purchase order date, a purchase order is our agreement to purchase from the vendor. What are our freight terms? What are the terms of the sale? Here's where you'll see that 210 net 30. How it will ship, the items that are being shipped, a subtotal, and a total. If we pay that invoice with the 210 net 30 terms, within the discount period, our entry will look like this. We'll debit merchandise inventory, or we'll debit accounts payable, for the full $500. That's what's sitting in the accounts payable account for that vendor, Zmart. The merchandise inventory, we will credit for the amount of the discount. $500 times 2% equals $10. It costs us $10 less because we earned the discount. We're going to credit cash for the amount that we paid, $490. The general ledger accounts look like this. Here's our accounts payable. $500 when we purchased it, we credited accounts payable. On November 12th, when we paid the bill, we debited accounts payable for $500. Our balance is $0. On November 2nd, we also debited merchandise inventory for $500. On November 12th, we earned the discount of $10, so the $500 minus the $10 discount means that our cost of that inventory is now $490 instead of $500. The cash that we paid on November 12th is a credit of $490. If we don't pay within the discount period, so we pay within 30 days, the credit terms, then we don't get the discount, and it's just like we did before. We'll debit accounts payable, we'll credit cash. Purchases with returns and allowances. A purchase return says, maybe the merchandise that we ordered too much, or it's not the right thing, so we're going to return it to our vendor. A purchase allowance says, this arrived a little bit damaged, and you go back to the person that you purchased from and you say, could you give us just a little bit of an allowance on this, or it's not quite the right thing, and they allow us a reduction in the price, but we keep the product. So a purchase return, we send the product back to the vendor. Purchase allowance, they give us a reduced price, but we keep the merchandise. To record a purchase allowance, in this case, we've got a buyer issues us a debit memorandum for an allowance from Trex for defective merchandise. So the debit memorandum is saying that they're reducing the amount that we owe them. So we're going to debit accounts payable for $30 and we're going to credit merchandise inventory for that $30. That's the allowance that they gave us for defective merchandise. If it's a purchase return, we're returning the merchandise back to the vendor. So when we ordered the merchandise, in this case, we had $250 of merchandise ordered. It was an accounts payable, 210 net 60 terms. We returned part of that merchandise. $50 of those goods were returned before we paid the invoice. So we now debit accounts payable for the $50. We credit merchandise inventory for $50. And we note that we returned those goods to seller. Now, when we pay our bill, remember, we're not paying the $250. Our accounts payable balance is now $200. The $250 original minus what we returned, the $50, equals accounts payable balance of $200. We're going to take the discount, because we're paying within discount terms, of 2% on the amount that's left. So 2% on the 200. We're going to credit that to merchandise inventory for $4, and the cash payment then is $196. This would be true of an allowance as well. We would reduce the amount of the allowance before applying the discount. Let's talk about those transportation costs. Free on board or freight on board, FOB, shipping point means that ownership transfers to the buyer at the point that it is shipped. So the buyer owns them when they're on the truck in transit to the buyer's place. The buyer is responsible for the transportation costs. The buyer will debit merchandise inventory and credit cash. If it's free on board destination, that means that ownership does not transfer until it's at our dock. So the seller then is responsible for lining up the transportation and delivering it to us. The seller records this as a delivery expense on their records and credits cash when they pay it. Here's an example. Zmark purchased merchandise on terms FOB shipping point. The transportation charge is $75. Because we're responsible for the freight, we debit merchandise inventory and credit cash for $75. Itemized cost of purchases. If we have the invoice, cost of merchandise purchases is $235,800. We had purchase discounts that we received of $4,200, purchase returns and allowances, $1,500. Those are both reductions to the costs of the purchases. And then we add in our cost of transportation to get a net cost of merchandise purchases of $232,400. I'm going to ask you to pause here, open up the workbook for this lesson, and we're going to walk through exercise 4-3. So you have your Excel worksheet open, and we're going to enter the transactions for this merchandiser. We're going to prepare the entries for a retail store. The company uses a perpetual inventory system and the gross method of recording the costs. We purchased $4,600 of merchandise on April 2nd from Land Company with credit terms of 2-15 net 60. So 2% in 15 days, net due in 60 days. The invoice is dated April 2nd, and it is FOB shipping point. FOB shipping point means we are responsible for the freight. What's our entry for this? Well, we know that we bought some merchandise inventory, right? So we're going to debit merchandise inventory for the $4,600. We're going to credit, we purchased the merchandise inventory on account, so we're going to go ahead and credit accounts payable. And note how I added the name of the vendor. This is so we can keep track of who we owe money to. That credit is going to be for $4,600. On April 3rd, we paid $300 of shipping charges on that April 2nd purchase. So it was FOB shipping point. That means that the freight is our cost. We're going to add that to our merchandise inventory, $300. And I think it says we paid it in cash, right? Yep, so we paid cash. We'll credit cash for $300. On April 4th, We returned some unacceptable merchandise that had an invoice price of $600. So we're going to make a return. We're going to debit that accounts payable for 400, right? 600, excuse me. We returned the merchandise. We no longer have it. So we're going to credit merchandise inventory for $600. On April 17th, we sent a check to Lion Company for the April 2nd purchase, net of the discount and the returned merchandise. So on April 17th, we know we're going to reduce accounts payable, right? Well, what is left? What is left in accounts payable is this 4,600 that we started with minus the return of 600. So we have $4,000 that we're reducing the accounts payable by, and we did pay it within the discount period. Remember, our discount was 2% within 15 days. Invoice was dated April 2nd. It's now April 17th. So we pay within discount terms. We credit merchandise inventory for the amount of that discount. The discount is 2% of the balance remaining. So that 4,000 times 0.02. $80. Cash is the difference between the amount remaining in the accounts payable less the discount equals the 4,000 minus $80, a credit of $3,920. Now let's move to April 18th. Here we purchased $8,500 of merchandise from Frisk Corp with credit terms of 110 net 30. So 1% within 10 days, a net of 30. The invoice is dated April 18th and it's FOB destination. FOB destination means that the shipper, the seller, is paying for the freight. Purchase of this inventory will debit merchandise inventory for $8,500, and we're going to credit, and I apologize, I thought I had a different accounts payable here, but I don't. So this is going to be, actually, we'll use the same. Should be Frisk. I don't know if it'll let me do that. No. So just keep it the same accounts payable because I forgot to add that in for $8,500. On April 21st, after negotiations over some scuffed merchandise, they gave us an allowance toward the $8,500 owed. We didn't actually return the inventory, but they gave us an allowance for it to reduce our overall costs. So on April 21st, we're going to go ahead and reduce the amount that we owe to Frisk, should say accounts payable, Frisk, right, for $500. And we're going to credit merchandise inventory $500 because it no longer costs us that much. We reduce the cost of that inventory because of the damaged merchandise. On the 28th, we sent them a check paying for the April 18th purchase. So it was purchased April 18th, invoice was dated April 18th. Our terms are 110 net 30. So on April 28th, we do qualify for the discount. So first thing that we have to do is figure out what's left on that. Well, it's the $8,500 original minus the $500. So we have $8,000 remaining that we owe them. We're going to credit merchandise inventory for the amount of the discount. This term was 1% in 10 days, so we'll take that remaining amount that we owe times 1% equals $80. The cash that we pay is the difference between what was left that we owed them minus the discount earned, so $7,920. And that is the conclusion of exercise 4-3. Now I ask you to pause and take a look at exercise or number 2 in your work. In 4-4, you were asked to compute the net invoice amount given the terms 210 net 60, 115 end of month, 110 net 30, or 315 net 45. So if you look at these, we take the gross merchandise minus the gross merchandise times the discount percentage. So you can see the formulas for each one of those. Or here I just took it times 0.97 because it's a 3% discount, so 100 minus 0.97. Here you can see the correct entries for recording the transactions for QS 4-5. And QS4-6, here are your responses, the correct responses. Please make sure to get in touch with me if you have any questions. And here is QS4-6.